Good morning, Namaskar. At the outset, I would like to extend my season's greetings to everyone. This is the monetary policy statement for the month of October, and this is how it goes. Kautilya, in his Arthasastra more than 2000 decades ago, had said, stability enables a state not only to share its wealth equitably, but also augment it. These words are relevant even today. In fact, they have eternal validity. Macroeconomic stability and inclusive growth are the fundamental principles underlying a country's progress. The policy mix that we have pursued during the recent years of multiple and unparalleled shocks has fostered macroeconomic and financial stability. The external sector also remains eminently manageable. The twin balance sheet stress that was encountered a decade ago has now been replaced by a twin balance sheet advantage with healthier balance sheets of both banks and corporates. India is poised to become the new growth engine of the world. The need of the hour is to remain vigilant and not give room to complacency. Lessons from the past 1.5 decades and from living through the global financial crisis and the taper tantrum tell us that risks and vulnerabilities can grow even at good times. All stakeholders in the economy, be it lenders, corporates, businesses, both small and big, and even policymakers should continue to reinforce their buffers and fundamentals in the fast-changing world that we live in. So far as the Reserve Bank is concerned, we have identified high inflation as a major risk to macroeconomic stability and sustainable growth. Accordingly, our monetary policy remains resolutely focused on aligning inflation to the decisions and deliberations of the Monetary Policy Committee, that is the MPC. The MPC met on 4th, 5th and 6th October 2023. After a detailed assessment of the evolving macroeconomic and financial developments and the outlook, it decided unanimously to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is SDF rate, and the bank rate remain at, consequently, the standing deposit facility rate remains at 6.25%, and the marginal standing facility, that is MSF rate, and bank rate at 6.7%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns to the target while supporting growth. Now, you may say that this is a status quo policy. Yes, to the extent that the rate and the stance remained unchanged, it is a status quo policy. But there are many aspects of the statement and our policy which I am going to now spell out, which will reflect, which will reveal and give an idea about our approach, not only to monetary policy, but also to various aspects of monetary policy as we move forward during this, amidst this global challenges and headwinds. I shall now briefly set out the MPC's rationale for these decisions on the policy rate and the stance. Headline inflation